This is the talk of Music City Real Estate.
Welcome back to another episode of the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
Hey everybody, my name is Monty Moore with Realty One Group Music City.
Hey, and I'm Carey Ann with CMG Financial and my mortgage team.
Every week, as you know, we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com. That's questions@talkmusiccity.com.
Welcome back there, Monty.
Welcome back, Carey Ann. It's fabulous to see you.
Always good to see you.
We've been missing you. Jason and I have been kind of limping along here.
We have.
Welcome back, Jason, by the way. Thank you for being here with us. But the last few...
We need to get Jason a shirt.
I know. We do. I don't know what...
we need to get him the uniform.
I don't know what the holdup there is. You know?
I added the bright flare because it's summer. We need to have some color in our life, right?
Yes, we do.
Very true.
We do.
So
we
good.
Do.
Well,
and I'm a lot Irish, so I bring the red a lot of times.
You do. You do in your face. I love
Irish?
that.
Hoover is Irish?
That's why I'm messed up. I don't know.
That's too funny. Well, now that it's warming up, and summer is starting to appear and our 68-degree weather is going away so fast, the sun's shining and those sunburns are coming, and so I've noticed that my little one definitely has her mommy skin. So
yeah.
I was like, oh, shoot. So, all those freckles are starting to show and we got to get that sunscreen on. But I'm one that does burn. It's a beautiful red shade and then it just goes away. Like there's no tan. I don't understand it. So
hey, the struggle is real. I mean, my wife and my daughter, they will go out in the sun, just walk into the truck and be tanned.
I know. Well, thank goodness for my tan towelettes. So I'm doing the healthy skin. No skin cancer for me over here.
Are those germ-free towelettes? I hope?
Yeah, exactly. A little sun kiss, little thing. So hey, so we are so excited to be back. We're going to talk about some really cool stuff today. Update you guys on some of the mortgage changes that are happening and some things that you can be doing.
This is important to those self-employed. This is really, really important. This is an underlined. Stay tuned.
Stay tuned, absolutely. But we can't do this without our amazing sponsors. So we want to give a shout out to Music City Removal. They are the #1 junk removal service in Nashville from residential, commercial, and construction. They're experts in ridding you of junk. Their costs include labor and dumping fees without any hidden or added expenses. Whether you need a full clean out or just one item removed, they have you covered.
The Music City Removal team knows the importance of respect and trust while in someone else's home. They understand the inconvenience of junk left behind by previous homeowners and tenants and are determined to provide an affordable and customer-focused junk removal service that puts you first. For a free on-site estimate, just go to musiccityremoval.com. That's musiccityremoval.com.
Yes, Music City Removal, because clutter ain't cute. Clutter ain't cute. Get that right, CA. So good. All right. So we've got some good things to talk about today. Only in a few days, a big guideline is changing with our conventional loans, Fannie and Freddie.
Yeah, don't keep us on the edge any longer, Carey Ann, because this is a realtor show, and we want to make sure we're always bringing value to our local real estate professionals. So what's going on with the self-employed?
Yeah, well, Music City in general, we house a lot of self-employed, right? I mean, from singer-songwriters to the amazing real estate agents to people just being entrepreneurs in general, So, as COVID developed, guidelines continue to make some changes, and I thought I was on the end of it. I thought, come June 30th, a lot of those COVID guidelines, which was the drive-by appraisals, the desktop appraisals, the 5-day verifications of employment, all of those go away starting June 30th.
Okay.
So I was expecting everything else to kind of make a change. However, Fannie and Freddie, which are the agencies that back those conventional loans, those conforming conventional loans, they made a change, and that's starting on any applications coming up this Thursday, June 11th.
Wow.
June 11th. So now the individual that is self-employed looking to purchase or refinance, if they want to use a conventional loan, not only do they show the last year's tax returns, which is a normal routine that you usually provide when looking to get a mortgage. Now, a lot of folks lately that are looking to get a mortgage have not yet filed their 19 taxes because they're not due technically until next month, July, right? So what I'm finding is we're using and qualifying people right now on 17 and 18 taxes with a P&L for 19 just to show proof that they satisfied or had an increase in income or had a trending income that was moving in an upward direction. But now the guideline for any applications after the 11th of June now requires the client who is self-employed to do one of the two things. They need, number one, to have an audited P&L, a year-to-date audited P&L for 2020 from a CPA, which is very difficult. So if anybody knows,
what does that look like? I mean, that's probably expensive too.
It is really expensive. And you and I think, oh, fine, go to the CPA and get them to sign a couple documents. It's not as easy as that because we've tried. Meaning I've tried to say, hey, dude, just, or gal, just, sign this, look, see this. It's no big deal. But a true audited P&L is receiving all of your credits and your debits and reviewing each of those and truly auditing, all of your income and expenses, right? So that is one option that you can do. The second option would be that you just create your own P&L, which most likely a lot of people do, and you sign it. However, you have to provide 2 bank statements, most recent bank statements, to show proof of that income that we're using to qualify you, which you and I both know with COVID, life's a little different.
Sure.
We have some peaks and some valleys, right? Being self-employed. And so that may not be as easy as it was maybe way before and or anytime. Being self-employed, you and I know that we have some good months and some bad months. Some quarters are better than others, and we just average the total, income. And so that's something that we have to navigate through with these new guidelines. So now, I quickly trying to think 2 steps ahead and saying, okay, if I was somebody self-employed, what questions would come at the lender? And one of them would be, hey, what if a lot of my receipts are paid out the first of the year and the end of the year, let's just say. So its history shows that I get a large payment, in February, and I basically my business lives off of that. And then fall hits and I get another large payment. If that happens, we can approve people case by case, but you have to provide proof from previous bank statements to show that that is normal, that you do receive a large sum during those times. And then we get some letters from your CPA proving that story to be true. Wow. But that's going to change a little bit of our landscape now with our self-employed.
That's with conventional loans though, right?
Just conventional. So it is FHA still following suit just with your normal 2 years average. And if we're not, if you have not yet filed 19, you don't have to provide that. We just have to provide a P&L to show a trending, an upward trending, type of thing. So FHA is still an option, but those people that want to do conventional 20% down, we need to now follow suit with this new, particular guideline. So if you are somebody that is out there that is self-employed and you haven't yet taken advantage of refinancing, my team and I, we have rolled out a special incentive of $2,500 towards that refi because we want to help you right before this new guideline change. But we would love the opportunity to talk through and share with you options of how maybe saving money can happen if you look to refinance.
This is if you apply.
It's just an application, right?
All you got to do is apply.
Right. Application date.
And you're locked 11. In to prior to the 11th.
Right. Now that is very easy on a refinance because an application is an application, right? On a purchase, a true application is when you have a contract. So that's the kicker there. So if you have somebody that is looking and they're about to purchase, they only have a couple days left, but they might really want to get that contract written.
In that scenario, what if the deal fell apart and they, put another property under contract? Are they subject to the new rules or the old rules?
The new rules, right? So it's a new application. So talking about that's great, Monte, that you're bringing that up because what about all of the clients that you've pre-approved, right? Before. So now we've gone back and searched out all of our pre-approvals that were self-employed. We have to now let them know that these are the new guidelines. If you don't contract on something before the 11th, we have to follow suit with those. Now, if they're contracted, so I was thinking, oh my goodness, maybe this is closings after, which is great that it is contracted because what about your new construction and things? So anybody that is truly under contract, all of those, we can follow suit with all the previous guidelines. So there's no worry about that. So all that we would need on the previous, and this is where it's such a big change, I think, because all we would need to do is just provide, if you're a real estate agent, provide a letter from your broker that states you have a listing. I didn't have to provide proof that you actually received any bit of income. I just got a letter that you had a listing, and I would average your 2-year tax returns, right, with the understanding that you are going to continue to make an average of that income that you have over the last couple of years, right? So this is a new guideline, and I understand it because life has been changed, but from many due to COVID.
You think it's going to go back, or will it stay?
Well, I asked, is this a temporary? Right now it's until further notice. So I don't know if that's, long-term or if that's short-term. I pray it's short-term. However, we have to just follow suit with those agencies. So maybe some people will eventually do an FHA loan. No, our veterans are still using VA loans. None of those guidelines have changed either. So, but wanted to make sure everybody knew about this major
a big deal,
change.
Only a couple more days.
Yeah, the 11th is the change there. So again, you can reach out to us if you want to look at maybe refinancing, take advantage of that incentive and following suit of the previous guidelines before those.
And that's $2,500.
$2,500 towards your closing cost, on the refi. And that should hopefully cover a lot of your cost, right? You may be just focusing on your escrows at that time.
So if anybody's thinking about refining that's self-employed,
this is the time.
You better hurry up.
Yeah, this is the time. Yeah, especially maybe if you're in an FHA loan and you want to get rid of that mortgage insurance. Yeah. We've been converting a lot from FHA to conventional. Sure. Rates are still so low. Yeah. It's amazing. And we've been so blessed that they've been still at such low levels. It's been able to maximize a lot of purchasing power for so many of our borrowers or buyers out there, which is exciting. So take advantage of these rates now because, you just never know when they're going to go away. But this is the time. If you've been waiting for that time, this is the time. The time is now for sure.
I'm feeling the pressure, and I just refinanced. I'm glad we got that out of the way.
I'm glad you did get that out of the way. Yeah, I was just thinking about you, but there's many other people that are in that same situation where you've got some great listings.
Yeah.
Here's the deal: what you have in your books.
Yeah.
They're just not going to close until probably the latter part of the year. So how does one handle that? You and I both know. Working with any type of self-employed, you've got contracts out, or you're billed out, but you don't receive that income. You hang on, or you live off of your your equity lines or your business loans. There's a reason why we have business loans, right? So and we know that we're going to receive payment in the latter part of the year. So interesting things for sure.
So for those who can't take advantage of these next few days and get a conventional loan, what's your fallback? I know you well enough to know you've got fallback B and C and D. I mean, what's the limitations on FHA, for instance, if you don't make this cutoff and you're not going to qualify, what would?
Yeah, I mean, you can definitely do an FHA on a new purchase. It's a great loan. If you don't have 20% equity in your house, FHA is still a good loan. The rates are still very low. They're actually right now lower than some of the conventional, options, but you do have that mortgage insurance for the life of the loan, right?
So life of the loan now,
it is the life of the loan. Yeah. So you do have to physically refinance out.
Even if you went at it with a refi of an 80%, it's still got still got that.
And a lot of people approach us and say they want an FHA loan. I've got 20% down, and they think they're not required to have the mortgage insurance. And that guideline did change. They are required to have mortgage insurance for the life of the loan. Wow. So that's one of the little bit of the kickers there. But sometimes we use FHA loans as stepping stones. So we get them into an FHA loan, and again, working with true lending professionals, they can see 2 steps ahead. So we're getting into the loan because we just need to get a loan today, but we have big plans for later, which means you're going to receive a large inheritance, you're going to have this house you're going to do remodels to, the value is going to jump up, things like that are going to occur. So we know that we're going to only use this type of loan for short-term purposes. Or I'm using this loan because my debt to income ratio is too high, because FHA does allow me to go up to 56.9%. Now you go, Carey Ann, you give anybody a loan at, close to 60% debt to income ratio. That's crazy. Well, every story is different, right? You and I both know that they have 2 house payments. They've got money in the bank to cover that house payment until it sells. So we follow the story to make sure that everybody's still comfortable. But an FHA option would be great for somebody that has not been able to sell a house. And then we do something called a no-cost loan, where we cover all the closing costs on the upfront, and then when they refinance, they just pay their refinance cost. Or we do the opposite. The seller's paying the closing cost on this transaction, let's just say. So we do an FHA loan, and then when they go to refinance, we cover the cost at that time. So we do work with our borrowers because we want to find the best scenario for them. We don't want them feeling like they're forced in that option.
And I love how you have so many different options and for each individual, because it's not a one-size-fits-all out there.
All right.
And that makes it easier on the realtor to help. Hey, let me introduce you to somebody that's going to help you figure this out.
Well, you're right. I mean, it's truly a puzzle. I mean, you gotta break it all apart and put it back together. And sometimes when you put it back together, it's not the same way you thought it was going to be.
Right.
You know, it's not always, it's not a cookie. I always say I'm not a bank girl. I've said that for years, and I'm just not my loans. I love helping people with more difficult scenarios. Mm-hmm. You know, I love the easy ones too, but we love to be challenged with more of those difficult transactions, which require many different layers, you know, and thinking a little bit more outside the box to help the client. You know, I had a gentleman call me and say, I want my payment. I want a new house for my children and my wife, but I want my payment not to exceed $1,800. So we looked at 3 different options to get him to $1,800, right? Because you and I both know, and maybe some folks out there don't know, that every $1,000 you put down on a house, really, right now with interest rates the way they are, only changes that payment about $8, right? So people think, oh, I've got all this money, that should change my payment. Well, that's not actually how that works. So how do I get your cash flow maybe to be very similar to what your 18
pay
would
off
be?
The car.
Yeah, exactly. So we do some shifting, and then you end up being the same exact cash flow out that you were initially, or what you thought you were going to be. So creativity is key.
Absolutely, it is, and that's one thing that I try to explain to agents. And one thing that I learned way back was that don't ever try to pre-qual somebody yourself. That you're not the expert, and just because they give you some off the wall, you know, you think, well, they'll never get a loan. Let them talk to somebody who is a professional like yourself, and let you figure out, you know, with your creativity, how you can help them, you know, purchase a house.
Sure. Yeah. And I also think sometimes you actually have to move a closing up. Example. So client calls and they have a certain credit score and they want a new construction house. Okay. And you and I look at the credit, and it's been, the credit score has been boosted, right, from a rescore. Well, that credit report is only good for 120 days.
Oh, really?
Okay. So one credit report is only good for 120 days. So my brain says, I don't want to take the risk and build this brand new house that'll take 6 months. That's going to force the lender to have to re-pull a credit report. Because what if the client doesn't truly follow suit and or does one little slip? Like there's no safety net there, right? So we are just at that score that's just getting them approved, let's say for an FHA loan, and they want this beautiful house. So sometimes I say, hey, let's go find a house that we can close in 120 days, 4 months, or hey, we need to speed this process up, and you actually need to find something that's a resale, because if you want this financing, we need to close in the next 60 days, right? So working with professionals that aren't going to set you up to fail, I think is so important too, because there's more to the story. You got to think 2 steps ahead. You got to think that credit report's only good for 120 days. You know?
And things like that I didn't think about,
right?
And I would say 99% of the agents out there would not think about. And it's essential to team up with somebody that knows what they're doing, like you are, and or like how you know, and you've got a team. And this is one thing I really respect about you, is that you have built a huge business and you've got teammates out there, but at the same time, you can pivot really quick. Just all these changes that are happening, I'm impressed. Even when COVID hit, you're pivoting. You're always thinking. You're being very creative, and that's why I really respect your business. In that, because a lot of people have this idea: the bigger they are, they can't change water, or change in the water, whatever it is. But you've purposely built it to be that way, to where you can do that.
I'm so blessed. I mean, the magic is behind the scenes, right?
Yeah,
I do have a great team. Everything passes my desk and needs my approval. We train. It's like a Super Bowl team. We don't actually do push-ups, but we do push-ups in a different way. We're reading guidelines, that kind of thing. We're doing mental push-ups, and we're preparing ourselves for the what if. I've got an awesome story, and it gives me goosebumps today. The Friday before Memorial Day, I got a call from a loan officer. And I also manage a lot of loan officers as well. So I have my team and other loan officers. So this other loan officer called, and it's funny, some people out there say, well, Carey Ann, you're too busy to help me grow, as an average loan officer. And I was like, no. And I love helping everybody. If there's a way, let's try to make it happen. So this loan officer calls me at 3:00 on that Friday before Memorial Day, right? Whoa. And shares with me that her buyer was in a domino effect, and her sale that she needed to sell to purchase this new home was falling through, and or the buyer was delayed. That lender couldn't get it done that particular day. And this buyer had all of her furnishings in the moving truck, right? It was money was already spent, and she had this brand new, beautiful, new construction house that she had planned that she was going to have her cookout, her Memorial Day cookout in her beautiful backyard, right? 3:00 on the Friday. So she calls me, and literally it was like, "Hey, what do you think? Do you think maybe we could?" I know this is a crazy question. For me, there's no crazy questions. I love a good challenge. I love a good challenge. But what I love is my operation is local. It's small. We are ready. We are always on our toes, ready for something unique to come. So it takes a whole village. It takes amazing people. And this loan officer worked with her client. They got a gift. And it happened to be that they did qualify with both houses. But the reason why we were selling one is for the equity. But we, at 3:00 on the Friday, restructured, went back to underwriting, reapproved, new docs went out, wire went out, and she still closed, on that. So that is what I love, talking about pivoting.
Wow.
And that takes a constant training. Like you have to be ready for that. Anybody else probably would say sorry, or would have a corporate company not backing them in their beliefs. Like my corporate's amazing. They know that I'm a little crazy. I'm gonna ask for.
Little cray is always good.
I know, and I told them the other day. I said, "See, if you just let me fly and take it." I feel like watching I kind of giggle watching that basketball documentary called The Last Dance. Did you see it? Oh, you have to watch it. It was great. And I put myself, I'm not a basketball player, and I don't know anything about basketball. However, I put myself in like one of the players. So I'm Rodman, right? So like Phil, the coach, Rodman was crazy, like cray. I'm not in that level. I don't do crazy things. I don't have earring piercings.
No tattoos.
I don't have tattoos that crazy. But Phil knew that if you let him fly a little, he could get the best out of him, right? So I always laugh. I said, I'm like Rodman to my corporate office, right? But they do. And we have hit time after time after time, things that nobody would know. I mean, nobody in our other all the other companies, or branches across the United States close loans in 8 days. We closed 15 last month in 8 days, right? And very smoothly.
I love the Facebook post that you did with several testimonials.
Yeah.
Speaking of which, just yesterday, we're in a growth mode here, and we're interviewing agents on a daily basis. Last week we interviewed, I think, 9 different agents. Yesterday we're with a gentleman who used to be a banker. Okay. And we started talking about you. You're part of our value add. I can imagine that. But we're bragging about you, and he goes, well, so what is the latest on how quickly a loan can be done? Probably, is it 3 weeks, or do you need a full month? It's coming from the banking world, I said, let me show you something. And I went into Facebook. I pulled up those testimonials. God, and I showed him that. He goes, no way. There was another one. No way. No, there was another 8 days, 8 days.
Yeah.
And so that was very, very impressive.
Yeah. Very impressive. It's fun. It's hard work. I mean, I told my staff, I said, we probably should tell people this is not easy, because people think we just do it.
You do it so often. You're making it look easy. But here's the deal. You're condensing what normally would take 30 days into 8 days, which makes it a little bit crazy, especially if you're doing more than one of those at a time.
Well, people say, how do you do it? Well, systems. And that is so important. And
you're talking my language.
Yeah. And if we can share to folks out there, even with real estate, I talk to some great, amazing real estate professionals, and you as one, systems. It starts with having a system and a plan, plan the work the plan type of thing. And I'm a big believer in that, and consistent systems, right? You can't just do this on a Monday and then maybe get back to it on a Wednesday. I mean, it's the same thing every single time. My goal is, a loan goes in the engine the exact same way it comes out every single time. It doesn't matter what it looks like. It doesn't matter what people like. Do you do loan sizes? I'm like, I don't look at loan sizes. I look at, it's a family that needs assistance. And if you continue to help so many families, all of a sudden, when we talk about sales goals, you hit your sales goals because you continue just to help as many families as you can. Last month, we closed a lot of loans, and I did not even know that, because I don't look at that. You're a statistics and graph guy, which is great. But for me, I know my attention. It's like squirrel, I'm like, oh my, I'll turn and I'll be like, oh goodness. Right. So I don't want that to change my focus off of what I need to do today, which is just help another family, just help another. So I just keep kind of doing that. But if people out there kind of follow suit with that, I mean, there's a lot of families out here in Middle Tennessee that we can help, even especially after COVID. And people talk about, can people get financing? Yes. The more we educate, the more we can help. How do people purchase a home after a pandemic, after a crisis? I wish I was really good at writing. I would want to write a little mini book, and maybe somebody can write that and I'll buy it from you. That's a great idea. But, there's people can, if your clients have been off of work due to and being furloughed due to COVID, and now they're back to work and they were salaried, all they have to be is back to work 1 week. And we have to show proof that they have a full 40-hour work week now, and we can get them financing. And what if there's somebody with tips or commission or bonuses? We may only need 2 or 3 pay stubs, depending, to show proof that their tips and bonuses and commission are back to what they were before. But that's really not long time, to be able to purchase something. So good stuff.
You just gave some folks a lot of hope, I think, that have been affected by that.
We want to let them know that if they want to take advantage of these low interest rates, there's 100% programs that we still offer. I love our company. They took a solid, confident stance. They did not make any changes. We followed suit with the agency's guidelines. So when everybody else, all the other lenders were removing different programs, we were maintaining those, and we were planning ahead and thinking about how we could handle the profitability concerns, with FHA and things and the 100% bond loans, but we still offer those today. So big things. But one program I want to share with you guys, because we're always educating ourselves about what we do today is going to pay off 60, 90 days, right? So another program that is wonderful that we never got rid of, and maybe you don't know about it, and I'd love to share with you about it.
Please do.
It's so exciting. I love it. It's like Christmas all the time. Woo! So it's our, how do you say it? It's our employee contract program. So you are somebody moving here, and even with COVID, people are still moving here. Sure. This is an amazing city to be in, an area to be in. So people are moving here with headquarters still here. And so if you've got a client that is looking to get settled here, a lot of teachers want to get settled. And again, school, what is that going to look like, when it all starts? But if you have somebody that has an offer letter, we can approve them off of that offer letter. Now, it needs to be a non-contingent offer letter. So offer their employment contract that they're receiving, and they then can purchase that home, get settled, and in 90 days, they can start their job. Is that amazing? So that gives them flexibility for 90 full days on a conventional loan to be able to move here, purchase, get settled, and then start their job.
Wow.
So that it might help those teachers or anybody that is looking here to get settled.
That's really cool.
Because sometimes people are moving and they have a severance package, from a relocation and things, and they aren't working, but they have, some sort of income coming in. That is okay. They want to move here. We show the offer letter, no contingencies. Like example, what's a contingency? You've got your police officers that have to go to the academy before becoming a police officer. Okay. So that's a contingency. Okay. Drug test is a contingency. Passing this test, like for me as a loan officer, I have to pass the state exam, real estate state exam. That would be a contingency. So having non-contingency offer letters, we can do that and be able to have them start their job 90 days after we close. Amazing.
That's amazing.
Use that. Creative financing can help you guys make connections, right, with new clients.
And that's why we just need to steer everybody to, people like yourself, because I would never know all of this. And if I tried, I would go crazy.
I am crazy. I'm just joking. No, but there's a lot. I mean, it's the guidelines. I've got that braid. People laugh at it, but it's all in there. So it's good stuff. So if you have a client that has a difficult scenario, we'd be honored to try to put it all together and make a fun transaction work
like
out.
Gary Vee had that guy that followed around with the camera, that Gary Vee TV. You should do like Carey Ann TV and just have somebody try to keep up with you all day.
It's so funny. We wanted to do, which you can't compliantly, because I would totally get in trouble because you can't have, I wanted to behind the scenes about all the stories that we have to solve, all the problems that we have to solve, the scenarios, be hard, from a compliance standpoint. But what is interesting is when you have those 8 days I said, just follow me when I'm running up and down the halls, in and out. And, but to think through COVID, we didn't have halls. Yeah. So we were doing it through Zoom meetings and all that. I mean, to think we helped so many families from makeshift offices makes me say, do I really need that 9,000 square feet?
Probably not.
Do I really need that rent payment that I'm paying every month? But it's good to have everybody back. It's great. I missed them all. So they're amazing. They're amazing people. So
It's good to have you back, Carey Ann.
oh, I love being here. This is great. This is great. So, well, I hope you guys maybe picked up on one idea.
Are you
if you're
kidding?
self-employed, I'd love to
Just
be able
getting
to
close
talk
to
with
this
you more.
lady, I learned something every time we'd listen to her.
Chock
awesome.
full.
Awesome information. And now,
Chock full. There you go.
yeah, chock full. Now we just have to make sure that all of our self-employed brothers and sisters out there, whether they be realtors or musicians or whatever, are hearing this message as quickly as possible.
Yes, absolutely. Well, thanks again for listening. We just appreciate all of you listening to Talk Music City. If you would like to hear more episodes, go to talkmusiccity.com. That's talkmusiccity.com. We will see you back next week.